thank you all for showing up. Welcome to Breaking into the USA on a Budget. My name is Brianne Rochelle. I will be moderating this webinar today. I work with Escalon Services, which I will touch on a little bit later. I'm based here in Salt Lake City, Utah. If you didn't just hear, it's a bit cold over here today. And I would love to hear where everyone else is logging in from. So I know we have a few people in the chat kind of dropping their locations, but if everyone could do that, that'd be really fun. Especially given this is geared towards companies outside the US. So if you'd like, please drop those locations. We do want to keep this webinar super conversational. We are here to provide you all value, so please feel free to use the chat throughout the webinar. If you have questions, you can use the Q&A thing here in Zoom, or you can just drop them in the chat and we'll try to get to them during the conversation and as we go. We'll also save a little bit of time at the end for additional questions if there are any. So today we have some really talented and experienced experts speaking with us to share with you some valuable insights regarding breaking into the USA on a budget. And I'm very happy to call each of these three speakers my dear friends. So I'm going to get through some quick introductions and then I will pass it off to each of them to cover certain topics. And I'll be fielding questions as we go. So up first, at the bottom of my screen, we have Will Webster with Escalon, which is an outsourced accounting and finance and HR firm focused on startups and high growth companies. He's going to talk with us about governance and formation, the regulatory environment in the US, and financial reporting in the US. Next, we'll have Ryan Bullen with GoGlobal, which is a global employment platform. Hi, Ryan. He's going to be sharing with us 3 different ways companies can expand into the US, and he's actually got a use case he'll share with us with one of their Aussie clients. Shout out to all the Aussies on the line. And lastly, we'll have Cal Davidson with Cake Equity. Cake is my favorite cap table management software. And Cal will be touching on why stock options are a must for US expansion. And he'll go into detail about what's different about issuing stock options to US-based teams and the most common stock incentive types for the USA and how to set up and issue options for international teams. So with that, we're just gonna get started. I'm gonna pass it off to Will Webster with Escalon Services, and I'll see you all in the chat. Thank you.
Thanks, Bree. Hey, I think I'll just jump in and cover off the first section here before I hand over to Will, just on the 4 pillars, yeah?
Oh, yeah, that's great. Thanks, Cal.
So great introduction and just for a little bit more background on myself. So Cal Davidson, I run partnerships at Cake Equity, and a big part of my focus over the last few years has been playing a big part in terms of our international go-to-market. So our original beachhead market was Australia. We're the dominant cap table platform here in Australia. But over the last 2.5 years, we've been really focusing on international expansion. And you know, we really believe in, you know, the power of employee equity and facilitating startups as they build global teams. And so that journey took us to the US market, and that's now our biggest market in terms of new client growth. Before we jump into Will's section on, you know, starting a business in the USA, I just want to go through just some, I guess, framework for setting up and thinking about your decision for international go-to-market. And you know, we've thought a lot about this at Cake, and we've actually, you know, had some stop-start experiences, as most startups do. We originally started with, you know, trying to go to market in APAC and using Singapore as a regional hub there, and do USA at the same time. And then after about 6 months of that process, and probably 6 to 9 months, we quickly realized that, hey, we're not a huge team and we have limited bandwidth. In order for us to actually be successful, we were just stretching ourselves too far, trying to do 2 countries at once, right? So we really needed to narrow our focus, and that's why, you know, 2.5 years ago, we made the decision to really focus on the US. And we still have clients coming out of Singapore, but in terms of real focus for us, in terms of the go-to-market movement, we decided to pause that. So what I wanted to do is just actually help set the scene around, you know, some of the things you want to be actually thinking about as you actually lead into and actually that decision around what market am I going to go to, and do I actually even really need to go to an international market. So let me just So what I want to talk through here is the four pillars of international expansion and a framework that you can actually use to actually think about that. This is could have in part taken from a presentation that Claire Bull from Rainmaking actually did at a scale-up conference we did at the beginning of the year, but it also leverages off a great presentation I saw recently by one of the executives from Xero, who are now massive in the USA, but she was actually talking through their experience and actually saying that the analogy that they used instead of the four pillars is the four wheels, and before they needed to go to market, they needed to actually have all those four wheels operating, and they need to have them aligned properly. The interesting thing that she said is actually when they went to the US for the first time, they actually didn't have all four wheels sorted out, right? And she said they actually wasted an enormous amount of money and a lot of time on the initial go to market in the US because they hadn't done their actual research properly, and they actually hadn't got everything lined up. So it's really important that you actually do the work beforehand and you understand and really actually research it before you actually start spending money on your go to market. So the first pillar here is, are you solving a significant problem in that market? So are you confident you're being able to actually get product market fit with your solution in the market? Is there a significant TAM in terms of that market as well? And if I look at that from a cake perspective, how that might play out. So, one of the things for us in terms of our decision to go to market in the US is we know that US is a strong market. We're a SaaS platform, so we know it has high propensity and good spending power in terms of actually being able to purchase SaaS, right? Another market that we actually looked at a similar time was India. India is a massive market for startups, right? And it has very low competition when it comes to cap table platforms. But in terms of so on the surface, it actually seems like it would have a good opportunity for us. They don't use SaaS as a platform, a lot of them, for actually managing their cap tables in that market. So we would actually struggle to get product market fit in that market. Whereas in the US, it's been a category that's been operating for 15 years. So we were pretty confident in terms of our ability to be able to actually get both product market fit and TAM in that market, right? Is your value proposition fit for that target market, and do you have a genuine point of differentiation? And there's two elements to that you need to really be thinking of is, right, does my offering play to that market, and does it differentiate from the other solutions that are in that market? In the cap table category, there's Carter that's been the incumbent platform there for the last 10 to 15 years. So are we confident that we're going to bring something different to the market? But also, are we actually confident that that the localized version of what we actually do? Because there's generally always an element of localization you're going to need to do for that market. When I localize what I actually do, is it differentiated as well? So that's a really important element as well. The next one is the unit economics. So that comes down to the buying power. If I look at that comparison between India and say the US in terms of buying power for SaaS, it's like chalk and cheese, right? Your ARPU that you can get out of a B2B client in our category in the US versus a B2B client in India is very, very different. So that's one of the things that's going to influence your decision. Plus also, your actual go-to-market. So, what are your go-to-market mechanisms? Are you using partners? What's your distribution networks? How are you actually doing that? And what's it going to cost you to actually to make a unit sale in that market? So it's really important. You can do a lot of work around these, understanding these before you're going to get there. You're going to learn a lot once you get on the ground there, but you can do a lot of this research beforehand. The last one is really, are you ready with the right resources and support to expand there? And I think this is an area where we're actually going to spend a fair bit of time on today, talking about the regulatory elements and the formation and those sort of things. But it is really important that you actually think through these things as well. So that's really the four pillars. And I, one of the things it's really important that you understand. I was on a panel last week at Sunrise here in Australia, and we were talking about international go-to-market. We had Matt Loop, who actually bought sort of Salesforce out to Australia. He bought Slack out to Australia here. So he's an American who spent 20 years bringing businesses back into Australia. And one of the key takeouts of that one is, like, you can do a lot of work with your go-to-market before you make the decision and learn a lot. So make sure you do the work and you think through those things, because if you don't do it, if you're not solving a significant problem, you're not going to get traction in that market. If you're not able to offer differentiation in a localized way that works in that market, then you're not going to be able to compete and you can't grow and scale. If you can't get the sustainable unit economics, but be it the on the purchasing side or be it on the actual production side, and your cost of goods sold, then you won't be able to be profitable and you're not going to be able to scale. And then if you don't have the right resources, you're not going to be able to execute. You can have the best plan in the world, but if you don't have the right people and you don't have the right regulatory incorporations and whatnot, you're going to trip yourself up, and you might get away with it in the near term, but you're going to create enormous headaches for yourself down the track. So I just wanted to cover off this bit beforehand. This is a way that we kind of think about a good framework for you to be thinking about, what markets and assessing the different markets and which ones you want to actually prioritize. It is a long journey. It's like anything in startups, right? What you think it's going to take you 2 years, but it'll take you 5 years. So strap yourselves in. There'll be a lot of ups and downs along the journey. But the key takeaway here is this is a framework that you can use to understand the opportunities and compare the different markets. Make sure you do the work and before you actually make the decision to go to market. And then once you actually do that, there's a whole lot of different ways you can actually execute on it. And, the reason why we're here today to talk to you is because some of the key things that we're going to talk about are going to be critical components in your success when you do choose to go to market. So I'll now hand over to, I don't know if there's any questions before I finish up on that. I'm happy to take them now, or I'm happy to hand over to Will.
And that's an awesome slide. So this stuff will be available later to you, but hopefully you took a screen grab of that slide. I know I did. Looks like we don't have questions, so we can pass over to Will.
Cool.
Thank you, Cal. That was fantastic. Share my screen real quick. All right. Thank you, Cal, for that. And so that's a great segue into starting a business in the United States. So, once you kind of decided, do you have product market fit? Are you differentiated? Are you localized? How do you go about doing this? There's a myriad of reasons why you would want to start a business in the United States, whether it's accessing investor capital. Obviously, the United States is the most developed nation in the world and has tons of resources for businesses. That's one reason why you might want to come to the US. Another reason is to access the customer base. So there's 300 million people in the United States. It's a consumer-driven economy. There's lots of areas where you could, capture market share potentially. However, it's not without its pitfalls. So when you come to the United States, you really want to think about, how am I going to establish my business? And you really want to focus on governance formation to begin with. What is your choice of legal entity? How are you going to set up your business operations? A lot of times, if you're a founder looking to raise capital, the Delaware C Corporation is the most preferred method for starting a business in the United States. It's very friendly to providing investors an ability to invest in your company as another legal entity. It's not without its drawbacks, however. A Delaware C Corporation, you're subject to corporate income tax rates in the United States, which are very significant, as high as 35%. You're also subject to double taxation as a C corporation. So when you take the money out, when the money is distributed out to the shareholders, not only is that money taxed at the corporate level, it's taxed at the shareholder level as well. So there's considerations that need to be thought through when you're thinking about how do you form your business in the United States. Another popular option is a limited liability company. That's a pass-through entity is how we refer to it in the United States. And so what that means is all of the items of income and deduction for tax purposes flow through or pass through to the shareholders, and there's one level of taxation. You also have an S corporation. That is another foreign legal entity that you can establish in the United States. You can incorporate and then make what's called an S election and take wages and pay yourself a salary. So these are all things you need to think about when you're starting a business. What is going to be your form or the entity that you take shape? That's just one piece of it. After you've kind of decided what is my legal entity or choice of entity, you have regulatory environment. So in the United States, you've got Internal Revenue Code, U.S. Code Title 26, which basically is all of the tax law that governs commercial activities in the United States. So if you were to look at how wide and long is that tax code, you could fill an entire first floor story of a building with just the tax law. And then on top of that, you have the court law, what is played out in the courts. So there's a lot to consider from a regulatory perspective as it relates to taxes. And that's just at the federal level. As you know, in the United States, there's 50 states, right? So each state has its own separate income tax provisions, sales tax provisions, use tax provisions, property tax provisions. All of these things need to be considered when establishing a business. Where your employee is going to be located. That is a key. That is a key indicator of what your cost of business might be. If you think about it, each state has a different way that they tax income. Some tax income based off of gross receipts, so just your revenues without regard to any kind of deduction. There are certain thresholds that states have when it comes to sales tax. Like, for example, in Alabama, you don't pay any sales tax on anything below $250,000 in gross receipts. Alabama is one obscure state, and no offense to Alabama, there's 49 other states. So it's something to consider when you start doing business in the United States, where your customer is going to be located, where your employee is going to be located. Each state has a different way that they apportion income and take their income taxes. Most of the time, it's based off of payroll, where are you renting property, or where do you own property. All of those things are used in calculating your state tax liability. So in addition to operating at the federal level, you have the state level as well. And then, in addition to that, you have the Securities Exchange Act of 1934. And so that is what created the governing body in the United States that essentially governs almost all commercial activity in the United States. And so underneath the SEC, right, you have what's called FASB. And so FASB is the Financial Accounting Standards Board. And that is a regulatory body that oversees U.S. generally accepted accounting principles. So that's another thing to consider is, the financial reporting aspect of this. How are you going to make sure you're compliant with SEC regulations? GAAP is the rule of the law in the United States. And generally speaking, GAAP is an accrual basis method of accounting, which means that income and expenses are recognized in the periods that they are incurred rather than the periods in which cash is paid or received. So that's a massive consideration that you need to be thinking about when operating in the United States is how are you going to set up your financial reporting system? And then what systems will you use? QuickBooks Online is usually a great platform for many companies starting out. We've definitely at Escalon set up folks on NetSuite out of the gate as a tool to help them use larger enterprise resource planning. And then also considering, FP&A and planning tools in addition to your accounting and reporting tools. Having a dedicated fractional CFO on staff to be able to help you kind of navigate all three of these components of starting a business in the United States is crucial. So it's really there's a lot of gotchas when you're thinking about starting a business in the U.S. And these are just some areas that you want to consider as you look to expand into the U.S. I'll pause there. I'm operating on one screen. Do we have any questions so far?
Yes, I've got two here. So one is, thank you, Will. This is great. How hard is it to change your entity formation if you get it wrong the first time?
That's a good question. And it really, as any good, CPA will tell you, it depends. If you've carried on operations and you've had some transactions occurring under one entity, changing to another entity can have dramatic consequences or implications, specifically related to taxes. So, for example, if you had incorporated as a C corporation and then you make an S election, you could have a built-in gains tax, and so that's something to consider. If you had made an election, or filed as an LLC, and you wanted to be, switch that entity to a C corporation, and no activities occurred, that can be a fairly straightforward process. So it just depends. Happy to take that question offline and chat further if there's other considerations to be made around that or other facts and circumstances.
Do you have a recommendation or any thoughts around if you're doing the traditional kind of startup funding journey and you're potentially looking to access VC funding, would that influence your decision around entity you use, and would you have any insights around that?
Yeah, absolutely, Cal. That's a great question. In that case, a C corporation is going to be the most advantageous for taking outside capital from investors. Number one, it gives them more, generally speaking, gives them more rights as shareholders. So it's more attractive for outside investors to invest in a C corporation. And then number two, the mechanics of a C corporation from a cap table management, as you know, are much easier than from a partnership or an LLC. And then especially from a tax perspective, you have all kinds of different code sections 734, 743, which are these nasty rules related to partnership taxation. If you are looking to access investor capital in the U.S., a Delaware C corporation is almost the gold standard. And I don't know if I know any VCs that would invest in a company that's not a Delaware C corp. Great question.
Awesome. And then we have one other one. If I'm on a cash basis now, at what point is it crucial for me to swap over to GAAP or accrual?
That's another great question. And as a traditional CPA, I'll say it depends. A lot of times you can get by on a cash basis of accounting on a tax basis. You can do it, I believe, up until 5 million in gross receipts. At that point, you have to switch to accrual. So there are IRS regulations that say, once you've reached a certain threshold, you have to report on a GAAP basis. There's also a lot of times if you're looking to raise capital, especially if you're looking to raise debt, or you're looking to take on commercial loans or get even an asset-based loan or a working capital loan, they're going to require GAAP basis financial statements as part of their underwriting process. So that really just depends on number one, IRS regulations, and then are you looking at outside capital, specifically debt? A lot of times, if you're raising venture funds, they're not necessarily doing the type of due diligence that a commercial bank would do or a private equity fund would do. A venture capitalist is typically not looking as much at a GAAP basis financial report. But the other thing is, one, in your trajectory, if you are raising venture funds, typically what I've seen around a Series A or a Series Series B at the latest, investors are going to require an audit, and that's going to have to be in compliance with GAAP.
Awesome. And thank you to Julio. Julio just dropped that straight to us, that a statistic here on this. 85% of startups that receive funding in the US are registered in Delaware.
Yeah.
I don't know where he got it from, but thank you for sharing.
Yeah.
Will, when do you typically get involved with them? Have they already got an entity formed before they're actually reaching out to Escalon and that? And sort of, is there, if that's the case, is there anyone like, I know, one of the amazing things about the US is just the depth of actually service providers for startups actually there, right? There are so many people who actually help you out through this journey, right? There's people who help, our experts around the incorporation, early stage incorporation, and that. What does that journey typically look like? And when, is there anyone you'd recommend, or do they come and see you? Like how do they get started on this journey?
Yeah, no, that's a great question, Cal. And to answer your point, at Escalon, we've partnered with pre-revenue, pre-seed companies. I've specifically worked with a company in Thailand that wanted to set up operations in the U.S. They had a medical device that had FDA clearance, and I worked with them right out of the gate to get a bank account set up, to help them get them connected with an attorney to get a Delaware C Corp set up, connected them with banking partners in the US to make sure they get the best possible banking partner. And so it's really at Escalon, we get in at the earliest of stages to help startups and help them scale. That being said, we'll also come in later on. So if a company is already performing and they've generated revenues and maybe they've taken some seed capital, we'll come in afterwards. A lot of times, the one thing I will say is accounting is kind of like it's a lot like the dentist's office, right? Like if you don't go to the dentist and get your like regular maintenance, you're going to have a root canal. It's going to be really expensive. Much like with accounting, if you don't do your regular maintenance and kind of start it off on the right foot, it's going to be very expensive to fix later on.
Yep.
There's just a lot of, when you convert from a cash to and I've done this a bunch of times, you've converted from a cash to an accrual or GAAP basis of accounting, you're going back and reconciling items in the balance sheet. And a lot of times, founders through no fault of their own are trying to wear every hat possible, right? And it's, you want to try to be efficient with your capital and your resources and your time. And when you want to take over the QuickBooks file and you want to do it and you want to reconcile the bank statements and the credit card statements, it just gets to be too much sometimes. And a lot of times you can make a mistake and you make one mistake and then you just keep going and it just kind of compounds. So that's the one piece of advice I would have is from the beginning is the best to usually start
And
with.
I would reiterate that, and if that's one of the key takeaways I'd like people to take away from this is there are amazing service providers like Escalon and GoGlobal who can help you in the US, right? So make sure you reach out to them, get them involved early, because like particularly the whole maturity and sophistication of the US is way ahead of a lot of other countries. They've been through multiple cradle to grave scenarios where they've seen people go through and exits, and they've been going through this for 30, 40 years. So they're actually much more aware of what can go wrong, and they're going to be asking those questions earlier on in your journey than they might in some other countries who are a less mature startup ecosystem, and they're going to be looking out for things, right? So it's really important that you actually get this stuff done early. And the great thing about the US is there are awesome people out there who can actually still help you through this journey. So get them engaged early on in your go-to-market movement.
Thanks, Cal. Yeah, and I might add also just that, if you're able to get your finances in order in your business early on, you have more historical data that you can rely on to then be your roadmap for your, to make smarter business decisions in the future. But you need to make sure that all of those historical financials are, accurate and on time and relevant. Some people go too granular in their books and some people don't go granular enough. It really differs business to business. So yeah, connecting with some experts who have been there, done it 100 times in specific industries or not, it's really good to have those people at your fingertips. So I don't think we have any other questions in the chat right now for Will, so we can continue.
Yeah. No, yeah, I mean, absolutely. Like on one final point is, a lot of times when you're going out to raise venture funds, you're building out a pro forma financial statement or, projected financial statement. And you want to make sure that agrees to the historical performance and that there's some assumptions that, when you take outside capital, hey, this is what this capital is going to be used for. And this is what these assumptions are based on this historical data. So to Brianne's point, it's crucial to have that accurate data.
We have a question from Julio, actually. Thank you for the question, Julio. Does Escalon focus on accounting services? Yes, and I will let Will touch on it.
Yes. So yeah, we do soup to nuts, financial reporting, CFO services, FP&A services, financial modeling, pro forma financials, budget versus actual. We also provide HR services as well. So we can help provide an outsourced HR function. We even do recruiting. So we've got pretty much everything covered in the back office that a founder would need.
And we have a tax arm as well.
And we do have a tax arm, correct? Yes.
And on this slide, Will,
yeah.
it does say life science. I think that, I mean, we do have a life science vertical. We're very experienced and have specialized teams in different verticals. So I don't know why life science ended up specifically here, but just so everybody does know, we have teams experienced in early stage SaaS, late stage SaaS, CPG, life sci, and nonprofits, etc. So next slide.
Yeah, so the other thing to consider is what is your thought process around entering and doing business in the United States? As I kind of mentioned or alluded to earlier, what is your choice of entity? That's kind of the first consideration. How will you set up operations? Is it going to be a corporation? As I mentioned, that's the most advantageous for accepting outside shareholder capital, but also comes with double taxation. The corporation gets taxed and the shareholders get taxed upon receipt of dividends. Is it a limited liability company? That's a flow through or pass through entity where the entity itself does not pay taxes, but the partners in the limited liability company do. Or is it a regular partnership? Those are all considerations, and this does not constitute legal advice. So I always recommend that when you're looking at that choice of entity, it's worth having a conversation with an attorney. And that's one thing that's amazing about the US startup ecosystem, is how freely and willing people are to share and provide free advice, really. I have a number of attorneys in my network that will take a free hour-long call with a founder to get to know them and understand their goals and provide some actionable insights. So that's always that's one of the best parts of doing business in the United States as a startup. Is it's a very open and accepting and friendly business community. The next kind of question that I kind of and addressed on the previous slide is related to regulatory. Where will you operate in the U.S.? The U.S. is 50 states, and if you talk to someone in Los Angeles, California, their experiences in life and what their day-to-day looks like is going to be significantly different than someone in Fargo, North Dakota, which is 2,000 miles away. That's something to consider. There's over 3,000 counties, so each state has jurisdictions within that state. They have their own laws. Some of them have their own sales tax laws. For example, in Ohio, you have the commercial activity tax law, which is basically each city in Ohio has its own tax return that needs to be filed. These are all key considerations. You may want to set up operations in the Northeast because of access to talent. There's a lot of high-tech workers in the Northeast, or if you want to try to access the consumer market in the Northeast. Those are kind of things you need to weigh out when you're looking about setting up operations in the US. The next kind of thing when you're thinking about starting a business in the US is going around that key question of people, process, and technology. How are you going to operate this business? What kind of platforms and systems will you use? Who are you going to partner with on this stuff? Within the US, you have HRIS, you've got payroll, you've got banking, legal, bookkeeping, all these different systems and technologies and processes. It's a lot to handle, but you want to make sure that you're thinking through all of these things and thinking about, how can I select partners in all of these areas that are going to help me accomplish my goals, which kind of leads to the last point there on partner selection. In the US, the business is very relationship based, but in many ways it's transactional as well. Selecting a partner that's going to open doors for you is crucial. Any good attorney you work with should be able to help make introductions to VC investors, or other investment banks, or other folks that could be like your first key enterprise account or something. So that's always something to consider when you're selecting a partner, is what other doors will they open for outside of just being a service provider?
Love that. Very important, because there are so many options out there, and there's different options that are strategically better for different people. So do your homework for sure, and reach out to the people who you know in the States. You can reach out to all of us, and we'd be happy to, point you in different directions. There's plenty of work over here. None of us are greedy. We'll be happy to, share different vendors. We do have a question in the chat. Will, was this the last part of your presentation?
Yes, this is the last slide. Yeah. So then,
okay, cool. We have a question. I'm wondering maybe Cal, if you want to take this question. This is cake specific to cake as a business moving to the US. Do you want to give a high level answer real quick, and then we can answer it?
Maybe I can do that when I come to my piece. Maybe just
Okay.
get Ryan to go now if you like. Yeah.
Yeah, let's do that. Thank you so much, Will. Really appreciate it.
Thanks, guys.
William Webster, everybody, go at him on LinkedIn. Feel free to ask him all the questions. And next we have Ryan Bullen with Go Global.
Okay, thank you very much. Let me share my screen. Can you all see that? All right. So,
Yes.
hey everybody, Ryan Bullen. I'm a senior manager with Go Global. What we are is we're an international expansion platform. So, really from recruiting to independent contractor payments, employer of record, entity setup, what we do is we help companies expand into new markets around the globe. And really my entire career I've been in the space. So, what I've been focusing on is really with business development and partnership relationships, but really what it kind of comes down to a lot of times is I'm sort of a therapist for startups when it comes to, all right, we have the goal of expanding internationally, right? Where do we start? What does that look like? How can we even begin to break ground? So what I'll do here is I'll just go over the three main methods in which companies will expand into the US and give a little like pros and cons of each. So what we're going to do, we're going to start with, look, everyone who knows Goldilocks, I'll go with the too hot, the too cold option, and the one that, for a lot of startups to enter into the new market is just right. So, and also apologies, I'm battling the sun over here as the sun sets in Denver, Colorado. But really first option and kind of what we've been covering so far is incorporating a business, right? So hopefully the context that Will was so kind to set me up with here kind of show how difficult that can be as a choice, right? Now, what this is really good for is one, you're going to be able to get that corporation stood up in the US, right? You can begin raising funds. You hire direct employees, so right, so they're going to be your own direct employees in that particular country, right? In the US in this case. And what you're doing then is that you're able to have a cheaper mode as you scale. Now, we always like to say there's no magic number for this, but generally speaking, if you're looking at, say, 10 employees or above in a particular country, an entity makes a lot of sense, right? But unfortunately, there are some cons that go along with this, especially in the United States. So in the US, right, as we have alluded to, let's think of each state as its own particular country, right? So there are 50 different states of labor law that you have to adhere to, right? So everyone looks at the US and goes, oh, California is so profitable, Silicon Valley, that seems like a great place to start. However, that's going to be one of the more expensive states to incorporate. From a labor law perspective, it's one of the more restrictive ones. And then also, who knows, especially when you're starting out, if that's really a great place to have the entity incorporated, right? Perhaps you find other talent that's in, Washington or Alabama or Michigan, right? How are we going to go about hiring those individual people? And are we going to have to incorporate in all of those states? The second, big challenge for setting up the entity there in the US is finding benefits. So this is not quite like Australia, right? The US, we have employment at will. It is not required by law that the employer actually give, health benefits to employees, right? But that is generally market norm. So what we see is that employers actually have to go out and find benefits packages for their employees. Now, the way that it works in the US is that is generally based on headcount. So from a perspective of an Australian startup that's looking to hire individuals in the US, right? If you have one or two employees that you're looking to hire, you're not going to get very competitive benefits rates from providers. And that won't really start to kick in until you have about, 10 employees, right? Because they build based on that volume. So generally speaking, providing those benefits up front with an entity for a low headcount in the particular state is going to be difficult. Not to mention, once you actually incorporate that entity in the US, who's going to run payroll, right? Who is going to be that benefits provider? Now, who are we going to have to handle the tax on a monthly basis or on an annual basis, right? Now we have to go find those all individual providers. Individual fees go along with that. And then really all that incorporates into this is a very expensive option, especially when you're getting started. Now, let's move over to the second one, independent contractors. So some pros about this is that, it's very cost effective. Now, as a startup, this looks very, very, advantageous to you upfront because you're not having a full-time employee, right? You're not giving them benefits. Essentially, it's the hear no evil, speak no evil option of getting a person in the United States. So generally speaking, independent contractors tend to be very useful when we're looking at project work. So if if you're trying to find a developer for 6 months or something along those lines, this is a great option to do so. And there's no need to find a benefits provider because, again, at the end of the day, they're not a W-2 employee, so they're not subject to what the local labor law would dictate, be given to employees statutorily. Now, some cons. So with this, it is very quick to hire somebody or rather engage a contractor. However, again, we're looking at those 50 different states of labor law, right? So what qualifies as an independent contractor in California is vastly different than what it would be in Nevada or in Florida, right? So we have to look at, okay, are we in compliance with local labor law there in that particular state? Is this person truly an independent contractor or are they really just a misclassified employee? Secondly, when you're in the recruiting process, right, what I would assume would be really advantageous to startups is trying to find somebody that's going to be a full-time employee in the US so that you can build your presence further and make more of an impact over time. Now, here in the States, people generally speaking are looking to have full-time employment because again, we don't have that socialized medicine scheme to fall back on. So with our full-time employment comes those group benefits and the actual health insurance that we're able to secure as employees, right? So in the recruiting stage, offering somebody an independent contractor relationship versus that of full-time employment generally rubs people the wrong way when you're looking to bring them on board. And if you're looking to hire like a head of sales or somebody pretty senior, right, that's going to be a disadvantage to you within the recruitment stages. Additionally, it's hard to offer somebody, direct equity in the particular scenario if they're an independent contractor. Thirdly, we have the employer of record solution. So this is what we kind of call the Goldilocks solution for startups looking to break into a new territory, because in this particular scenario, the employer of record hires an individual that say, you find a person in California that you want to hire as a full-time employee. The employer of record will then hire them under their own direct entity as a legal employer. And so in this case, a legal employee of GoGlobal US, and then assign their services 100% back to you, the end client. So that employer of record takes care of all of the payroll, all of the employment agreements, the compliance, the benefits, local tax compliance as well on your behalf, all while breaking it down into a monthly invoice there in Australian dollars, in which case then we'd pay the professional in the US in USD. Now, again, this is really great for sort of serving as that Kickstarter in a new territory. So the onesie twosies, hiring somebody, they're able to bring them on quickly. So you're not having to waste months setting up that entity. You can hire somebody in usually around 10 business days, depending on the provider. Generally speaking, most employer of records in the US are registered in every state. So you don't have to worry about, okay, can we hire somebody in Alabama versus California, right? The employer of record is already registered from a tax perspective in that particular state. And what's really great is that the employer of record, generally speaking, will have access to more advantageous group benefits packages for you to choose from to be able to offer to the employees at a cheaper rate. Because again, like I mentioned, there is that hurdle of crossing the headcount that the employer of record generally will have more employees already under the entities in country and already taking advantage of that group benefits rate. Now, there are some costs and some, again, the other side of the coin for this would be is that an employer of record never solves a permanent establishment risk, right? So depending on what you want to do and what you want to hire for, that PE risk is always present. Now, for 1 or 2 employees in a country, it's virtually zero. But as you scale, and especially as you begin to hire more positions with revenue, right, you're going to want to be able to move over to an entity, because then local tax authorities will say, hey, where is your entity? What's going on with these positions?
So Ryan, just to be clear on that, permanent establishment risk you're referring to is when you're being required to pay tax and everything because you're seen as actually doing business in the country, yeah?
Correct. Yes.
Yeah.
So that is something that, using an employer of record, again, never fully solves this problem, but from
Yep.
a risk perspective, it's incredibly low as you
Yep.
start. So it's a really great, beachhead to be able to break into that particular market. Then also what we're looking at is, as you continue to scale your teams, it becomes cost prohibitive to keep them on an employer of record, right? Generally speaking, the fees for an EOR are not going to be the same as what you would get from a payroll provider. As if you have 20 employees, there usually is a flat fee per employee depending on the provider. Some providers will charge, percentage of total compensation. So it could be expensive again as you grow. And then lastly, you are subject to what the employer of record is able to offer, right? And whatever benefits provider they are using. So generally speaking, it's kind of like a take it or leave it model when it comes to the benefits that you're able to offer. But those are the 3 options that you're really looking for when breaking into the US. Any questions on that so far before I move on to a quick use case?
Yep, there's just one quick question, and it is related to that permanent establishment risk threshold. So say someone goes with option 3, working with, let's say, GoGlobal as their employer of record, they sort of test the market, and then once scaled and ready to move to option 1, how easy is it to make that switch? And then I think, do you have an easy answer as far as like the threshold of how many employees before it becomes too much of a risk and you should swap to option
So
1?
to take a page from my friend Will, it depends, right?
Okay.
And I hate to be that one that keeps using that trope as well, but it does. So it depends on, first off, headcount, right, in a particular country. And then secondly, what kind of jobs are they doing for you, right? Are these employees generating revenue? Are they, simply doing marketing and perhaps like web development, or are they generating sales, or you want to have like a more senior kind of executive level position, right? What we would be able to do as a provider is we coach our clients on, hey, let us know what your growth plans are in a particular country. And then as you scale, what we'd be able to do, and we do this transition all the time, right? Where the end client is needing to set up the entity, we can actually help with that entity establishment as well. And then at the time that needs to come for transitioning the employees over into that new entity, we'll help the end client actually secure, from coaching to who's going to be a good benefits provider, what you need to be doing, XYZ when setting up that entity, and then help in transitioning the employees over. So there's really a seamless touch throughout that entire employment of professionals.
Awesome. Okay, good. And then, so yeah, if anyone has questions on strategy regarding that, reach out to Ryan. But yeah, let's move on to that use case real quick, and then we can pass over to Cal.
Sure.
Thanks, Ryan.
No problem.
Good stuff.
So just wanted to highlight an Aussie use case for you all, just considering that, we're talking to expanding into the US, and this is one of our, good use cases from a client. So I won't name the actual public office in Australia that uses us. However, what we were faced with was an Australian public entity that needed to help, really get aggressive with their international expansion plans to help bring investment back into Australia. So they had a very limited budget, being a public entity, right? We can't be going and setting up entities in all of these countries around the globe where we want to be able to bring investment in from, especially when we're looking at a country like the US or China, right? Very complicated when it comes to what we need to do from a registration perspective, and not to mention the capitalization costs. So they were very tight in their budget up front, and they needed to find a way to be able to do this quickly. And then thirdly, they needed to be able to hire a very specific skill set. So virtually rendering independent contractors, unrealistic in finding the same kind of people, what they're looking for from a seniority perspective. So what we were able to do is we served as their employer of record for in about 5 countries, starting with the US. Now, what's really great is GoGlobal, we're registered in about 85 countries around the world from our own entities and our own teams perspective. So this Australian client was able to speak with our Aussie team and be able to be invoiced in Australian dollars on a monthly basis, and then we pay their professionals in the 5 countries that we have around the globe. So this was a employer of record, turned out to be a really fantastic option for them to be able to find that full-time talent, hire them compliantly, and do it at a cost-effective, choice versus setting up that heavy-footed entity. So I'll stop sharing my screen there and hand it over to Cal if there's no questions.
Thank you, Ryan. I don't see any questions right now. So Cal, over to you.
Thanks,
But
Ryan.
I would be curious if anyone in the chat has not heard of an employer of record before, has not heard of this process. So let me know if you haven't. I'm just curious. Go ahead, Cal.
Cool. Thanks, Ryan. And just to be clear, like we've spoken a lot, and Ryan's spoken a lot about Australia to the US, but you facilitate hiring across multiple countries, and as well as for US clients doing international go-to-market and hiring in other countries as well. So it's not just Australia, US, it's across multiple countries. Thanks. I guess it's that's a nice segue. Kind of, we're talking about hiring a team. We're talking about establishing an entity and hiring a team. And as you go through that journey, one of the things you want to be looking at doing, we talked a little bit about healthcare, but another element that's going to be really critical to your hiring and getting the right talent in the US is actually going to be the stock incentives. And if you actually look at, I spoke a little bit earlier on about the sophistication of the US market. If you look at the sophistication around equity incentives, definitely, there's a USA here and daylight second in terms of just the understanding of it and the desire to have this as a critical part of the of their remuneration. And so, at Cake, we really believe that, having a motivated a group of people and having a motivated team and the right talent on your team is a really critical element in the success of any startups, and particularly in your success in expanding in a new country. That goes for employees, but it can also be used across other people like advisors and things like that. And I can talk to that a little bit about how we've actually done that in a little while. I'm going to focus mainly around the team, the equity incentive side. We can actually, if we've got time at the end, we'll probably end up running a little bit over time. But if people do have questions about the capital raising side in the US, we can actually talk to that a little bit as well. But why are stock incentives so important? And I'd say, if you look at the US ecosystem, the whole flywheel that's helped generated by equity incentives has been rolling. It's massive. And B, it's been going for so long, right? And if you look at, the terminology, like you hear, PayPal mafia. Well, PayPal, like people that came out of PayPal, there's Elon Musk, there's, Reid Hoffman, who went to LinkedIn and whatnot. And these people came out with skills and experience, but they also came out with big benefits from actually being participating in equity incentive schemes. So, the US has actually had this flywheel turning for like 30 years, maybe even 40 years from the early days. And so they've actually seen this create generational wealth in the US. And so they're actually looking for this, and they're really switched on to it, as opposed to, let's say, in some of the more developing countries in Southeast Asia, when you're hiring, they might have a higher preference for cash and be less focused around the stock incentives. But definitely in the US, it's absolutely critical, if you want to get the right talent on your team, that you have this as part of your overall incentive packages, that you have stock options in there. So one of the key messages that you really need to actually understand is that just as when you're employing someone in a new country, you need to understand what the rules and regulations are in that country, because they're going to be different to your home country. It's the same thing with stock options. So you can't just take an ESOP grant that you're doing for an Australian-based employee and then actually give that to a US-based employee, because it's not going to work, right? It's going to create potentially tax obligations for you, but also potentially create some really real disadvantage for your employees, because you're not taking advantage of the actual concessions and the rules and regulations that exist in that country. So what are some of the common differences that you're going to see in the US? So there are certainly tax concessions for startups in the US, and I'll talk a little bit about what they are, but they operate differently. How do they work in Australia? There are some common themes to them, but there are differences that need to be really taken into account. There are valuation requirements generally to actually set the strike price for your options in the US, and they're different to other countries. So in Australia, you're able to actually do almost like a back of the envelope NTA valuation to establish your strike price. It's relatively easy. In the USA, you need quite a formalized 409A valuation, which actually is going to establish your fair market value for your strike price for your options. If you're going to the UK, you need a HMRC valuation. If you're going to Singapore, you don't need a valuation. You can pick a number out of the air. So it's different in every country. In the US, you need a 409A valuation. Cake can provide that as part of our service. That's part of our packages. We can actually provide those valuations for you, but it's important you actually get those done, and that's one of the differences in the US. And then your reporting and tax requirements are going to be different in the US. So, you need to do option expense reporting, and then there's, as Will went into before, like there's a national, and then there's a state, and then even there are actually even some city or county-wide taxation things you might need to actually understand and be reporting to as well. So it's really important that you understand what you do in Australia is not going to be applicable in the US. Make sure that you've actually got it, understand what the requirements are in there, and you're actually doing it properly for the US. This is just a really high-level overview, and we were having a bit of a discussion. I was talking to Will about this the other day, and he might have a couple of things to throw in here, but here's some of the common types you'll actually hear about. As with any of these things, like, we're not providing tax advice here. It is really about, I think we've had it twice, from Will and Ryan. The reality is it depends a little bit on your circumstances, and there are some comparisons you need to go along. But broadly speaking, here are some of the buckets you're going to hear about, and some of the terminology. If you start researching on what stock options look like in the US, you're going to hear these things. We have these incentivized stock options. Generally, they are actually granted to employees, and they generally have favourable tax treatments with them. So they generally allow employees to defer the tax obligation that they're going to be required through those incentives. You have NSOs, or non-qualified stock options. They can actually be provided for people that aren't employees. So if like in Australia, you can do ESOP for contractors. In the US, you can't do an ISO for contractors. You need to be looking at using an NSO, and they still work really well for providing incentives to contractors, but they're not going to be as favourable in terms of the tax treatment as an ISO. And then we have a range of other things like RSUs, SARs, etc. So I don't plan to go into a lot of detail of it, but I just wanted to touch on these and actually say, again, when you go to the US, you're going to hear different terminology to what you're going to hear in Australia, or what you're going to hear in the UK or other countries. It's important you understand all the different mechanisms, and it's not only in terms of the different mechanisms that you use, but it's also things like the way that you actually structure your vesting can impact the tax treatment on that. And Will, I don't know whether you want to throw in what you're seeing a lot of at the moment.
I mean, I just kind of drawing on some of my experiences consulting at different tech companies and setting up some of these plans and working with the individuals. There's a lot of complexity around when you exercise stock options, and there's lots of planning to do. If you're an employee that's earning stock options, with the ISOs, you have this concept of the alternative minimum tax, which is in parallel to Title 26 US code that I mentioned earlier, and you pay the greater of them too. So it creates a different timings. The US tax system is so complex that it creates two different timings for your tax, where you would pay a tax later. You would get you have to pay a tax essentially on ISOs when you exercise, potentially, if you exercise enough and the bargain value or bargain element exceeds a certain threshold. Yeah, it's very complex. And then the newest thing in the US that I've seen lately is these double trigger RSUs, which is basically you have two different vesting schedules. You have one that vests typically over a 4-year window, 1-year cliff, where you 1/4 of your RSUs vest to you, and then over the remaining 36 months they vest per month. But then you have another thing built in where it's okay, you don't have a taxable event, or they don't vest to you till there's a liquidity event, which would be either an IPO, M&A, or buyout. So the all this is to say is employee stock options in the US are very convoluted and definitely requires advisors.
Yeah,
And
great.
definitely talk about this if you're going to be raising too, because your cap table means everything to investors. So.
Yep. And you know, like in you know, just to talk a little bit about our experience. So, you know, going back to Ryan's presentation there, we've actually used a combination between entities in overseas. We've got a very global team, right? So we've used entities incorporated in different countries. We've also used EORs, so we've had a really good experience with that for initial employees as part of enabling our go-to-market, and we also hire some people via contractors. So we've done a mix of all of those things, and I would highly recommend that, you know, for those early days, you know, consider using an EOR solution. It can be really effective way to do it. The other thing I'd say about the stock options is, you know, one of the things that we did early on in our go-to-market in the US is we engaged some advisors and some advocates in the market that had really strong networks and a lot of knowledge in terms of startup ecosystem in the US. And we provided stock incentives as part of the mix of them, and actually being able to actually hire them. At that point, there's no no way we could actually go out and afford to actually hire these people full time. It just, you know, that wasn't viable for us. But by using stock incentives, we were able to actually get some super talented and super connected people that really helped us actually ramp up our go-to-market and learn really quickly in those early days. So I would say, you know, think about these things not only just for your teams as you're building your teams, but also think about advisors and other people that you might be able to actually use these stock incentives to actually get them on board to help you accelerate your early progress, and as you start to scale in those new countries as well. I am conscious of time, so I'll just finish off here by saying, you know, one of the superpowers at Cake is really enabling people to be able to actually do equity grants across multiple countries. You know, we've got clients like Linktree who are doing, you know, 300 people doing grants across 9 different countries. I think the most that we've actually got is actually doing grants across 13 different countries, right, to their teams, right? So this is something that we do a lot of, and our platform is really set up to be able to actually enable you to actually do that pretty seamlessly. The US is an absolute no-brainer for us because we're doing stock option plans in the US all the time. You can actually run your Australian option pool, but then also actually we have templates for actually doing your offers to the US employees, and then all the mechanisms set up to actually accommodate the different variations around NSAs, ISUs, RSAs for your US option pools as well. You can manage it all on one platform, so you don't have to actually manage it across spreadsheets and with multiple vesting schedules and that as well. So yeah, we're really set up to actually do that. So if you know, as you actually go through those motions and you're starting to do that, make sure you do it properly. Make sure you do it properly from day one. We've spoken about it in relation to the, you know, the regulatory and the tax piece. We've spoken about it in terms of the employment bit. This is equally important on this side as well. Don't just do a handshake deal and say, hey, you know, we'll take care of this down the track, because you're just going to create more expensive, bigger headaches for you. Do it properly from day one. We've got a solution that works from you from really early stage. And then, you know, as we spoke about earlier on, you've got people like Escalon, you've got people like GoGlobal who can help you through those other elements of it as well. So, are there any sort of questions on the stock option side of it? I know I've got an outstanding one here for Alex on the chat that I can talk to as well, but
Yeah.
are there any questions?
We do. We've got Alex, and then we've got Adam with his hand up as well. So maybe we can do just a quick sign off for anybody who wants to log off, and then anybody else who wants to stay put and ask some questions and have some conversations. I think we're all here for a little bit longer to do that. So first of all, just thank you so much to Cake for hosting this and putting this together. We are so grateful to partner with you. We love you guys. Huge thanks to Jem on your team for, doing all of the back end work for this. And I know that, we're each going to be sending out emails to the attendees. I know that each of us have a special offer to, if you are ready for services like ours, we would love to engage with you and have a conversation. And also, again, we're just here to be your friends and we want to help. So please reach out to us and we would love to do whatever we can to help. With that, yeah, let's maybe go to Alex's question and then we can unmute Adam for Adam's question. So do you have that? Or would
Yeah,
you
I've got that, so I can see that. So, Alex, I think there may be two parts to your question. I'll just explain how we actually, how our progress in terms of US go-to-market went. So, interestingly, our original, we've actually got a Delaware C Corp as our head co, right? It's not our operating entity, but it's our head co. And how that came about is actually Jason Calacanis, one of the sort of best known angel investors globally, and Launch Syndicate led one of our early rounds. And that actually is kind of a little bit asked about face to how it happens for most people, right? Most people will actually have to have revenue, have to have traction in the US before they can tap into US investors. Ours happened a little bit back to front because Jason Calacanis was putting out a question about, he was dissatisfied with Carter, who's the incumbent cap table provider over there, and said, does anyone know some alternatives? And some people actually suggested, hey, you should check out Cake. And bingo, we were actually going through a raise at the time, and we ended up actually, he ended up leading the round for us. But in order to actually execute that investment, they only invest via Delaware C Corps at that particular point in time, and so therefore we actually had to flip up to the US in order to actually access that funding, right? So that's how we kind of did it. So, but that was for the funding piece, and that predated our sort of US go to market, I guess, in terms of from a expansion perspective. And then from the expansion piece, as I said before, we've actually, a lot of what we've done in terms of US expansion was initially, and it's still a lot of it is actually supported out of Australia. We're a very globally distributed team. We've got some marketing teams in Philippines and in Spain. Our dev team are in Portugal, and then we've got a bunch of people here in Australia. We've also got partnerships and salespeople in the US now as well. So I would say a lot of that go to market does come out of Australia still, but we have people that we've hired locally there. I've spoken about the fact that we've actually also engaged advisors and advocates to actually help us with our go to market initially. And then the other thing that we also did, which is probably worthwhile mentioning, is we really took advantage of a lot of the trade agencies and things like that, like Trade Investment Queensland, Austrade, etc. Really also, they have a landing pad program and that, and we tapped into those things as well. So I hope that answers your question, Alex. I'm happy to, if you want to hit me up on LinkedIn or whatever, I'm happy to talk through that a little bit more if you like.
Awesome. And then Adam's got a question next. Adam, I don't know how to unmute you. So if you could type your question in the chat, that would be awesome. And while we're waiting on that, I've got another question here. How often do we need updated 409A valuations in the US? And how do those come in your packages?
Well, generally it's once a year, or when you're doing a new equity grant that would actually, and if there's been a change in valuation, so that's generally, so it could be more than once a year depending on what's actually going on, but generally it's one a year. So Will, I don't know if you've got anything to add to that.
No, I mean, it is the 409A refers to the Internal Revenue Code section, and in that code section it does say, and it's open interpretation, but yes, once a year minimum, and then any significant event, which could be a plethora of things. It could be a change of leadership, it could be a capital raise, could be an exit. Any of those kind of things could trigger it. But once a year is generally the safe harbor.
And that your packages come with 1 a year, right?
Yep. Yeah,
And I
and
think
you can use cake without the 409As or with the 409As, and our pricing's on the website, so people can go in and actually just look at all those options there. So yeah.
okay, and then we're still waiting for Adam to write his question. So in the meantime, Ryan, I don't know if you saw Stuart's comment. So we do have a couple of people. Fierno, this was their first time hearing about an EOR. Stuart had kind of dropped their experience in the chat. Did you have a chance to read that? Did you want to comment on it?
I did, yes, and I responded to it with the chat, but it's better to kind of talk through that as well because, yeah, I mean that really highlights the importance of being able to go with somebody that really understands the market from an employer perspective and is really able to handle that compliance for you. So, when you're looking to expand into these new markets, right, that compliance piece is the hardest one to figure out. So having a provider that truly, is able to mind their P's and Q's in every state around the US will really help save you money, especially when it comes to, that initial setup, right, getting into the country. But when we're looking at terminations, right, making sure that it's cost effective for you, that everything is done compliantly, and that you aren't subject to a risk of, a huge overpaying of somebody and not really understanding what exactly is the process to be adhered to from a compliance perspective. And that's really where we shine through. So like Cal, mentioned previously, right? It's not only the US that we can do employer of record for, but we help our clients hire, in about 85 countries directly around the globe. And so with that, we have not only the entity registered, but we have local teams on the ground. And so our clients are able to have access to not only a dedicated account manager in their local time zone, but they're also able to have access to those local teams in the particular country that they're hiring in. So there's somebody there that's really in charge of following that compliance, making sure that everything is adhered to, and depending on the country and how difficult the terminations can be, finding the most cost-effective way of going about that on our client's behalf.
Awesome. Yeah, I know that we've experienced that a lot here. I know we just had something happen with I-9 verifications and re-verifications here in the States last August that, kind of threw everyone for a loop, and everyone kind of had to go in and update their employee onboarding processes. So I'd imagine that it's crazy everywhere else too, constantly
Yeah.
changing.
Yeah, the employment
People are
laws
very
and
proactive.
regulations in the US are insane, and having an ally like Ryan on your side to explore that is invaluable.
Yeah, it's not, there's the government isn't particularly proactive about making sure that every business owner knows what changes are. So having someone
No.
on your team who's proactively looking for those things and then updating you is very, very important, because otherwise it can cost you a lot of money. Cool. I don't see any other questions. Adam, feel free to reach out to us direct, whoever your question is for. I know your hand's up. Does everybody else want to, Cal, do you want to sign us off? Any last
Yeah,
words?
thanks, Brianne. Thanks, Will, and thanks, Brian, for joining us. I think, US as a destination and as a market, it's very attractive, right? As we said, consumer-led, big total addressable market. I think as startups, we are very fortunate. There are some excellent, the whole ecosystem to actually help startups, grow, and right from, pre-seed right through in the US is very mature, very well developed. It's great to actually have, we be working with partners like Escalon and GoGlobal to actually help our clients and our users actually on that journey. And so thanks for joining us and sharing some of your expertise today. I think some of the key messages I'd just like to highlight again before you go is like, do your research up front, make sure you've got those 4 pillars and in place before you actually press the go button, because you can waste a lot of time and money and energy if you don't do that. Reach out to the people that are on here, Will on the formation, the CFO side, Ryan when we're hiring side, and then Cake on the whole stock incentives, but also the cap table management side as well. And yeah, I think, there's not only ourselves, but there's also our networks as well. So if we can help in any way, reach out on LinkedIn. We'll actually send some offers out to you, but please don't be shy in actually reaching out for help. And yeah, good luck with your expansion plans. Thanks, everyone.
Thanks, everyone.
Um,
Thank you, everybody.